Welcome to Building Better Worlds. Our mission here is simple: to explore how the innovations of Web3 can be utilized to sustain the natural world. Join us as we learn how to navigate through and build our better worlds.
Welcome to Building Better Worlds, where we celebrate voices from around the world that are helping to forge a shared and abundant Web3 future. I'm your host, Vivi. Our guest today is a thought leader in the carbon emission space, and she and her team are using blockchain technology to achieve the goals in reducing global carbon emission. Now let's welcome Aldyen Donnelly, co-founder of Nori, a blockchain-based startup. Aldyen, welcome to the show.
It's an honor to be here. Thank you very much.
Yeah, the honor is ours. Aldyen, you've been in the carbon emission space, like I mentioned, for decades. Could you tell us a little bit more about yourself and also what drives you forward?
It's interesting. I've been working in I had been working in both the health and environment new technology spaces all through the 1980s. And in the early 1990s, thought, is there maybe one thing I should focus on, where if working on one thing would realize more coincident benefits, and pretty clearly figured out that if we worked at reducing greenhouse gas emissions or discharges to the atmosphere, much of the time there were so many great co-benefits, usually less water pollution, greater water retention, more resilient soils. So I did decide in the mid-90s to maybe focus on climate change risk and greenhouse gas mitigation. I remember back in the time thinking, if you were really focused on reducing smog, probably the first two least cost smog reduction measures were driving up greenhouse gases. But if you picked the third least cost, that somewhat more expensive smog reduction strategy, you could also be driving down greenhouse gases and getting a lot of other co-benefits. So I decided it was efficient to focus on greenhouse gases and climate change risk mitigation.
I see. Yeah, we also know that, the international carbon markets have been playing a key role in reducing the global greenhouse gas emissions. Now, your startup, Nori, is using the blockchain technology to create a carbon removal marketplace. And I would like you to tell us more about this and how it works and what difference does it make?
I have to say, and I do want to say this with respect, but Nori exists in part because we actually disagree with the premise that existing markets and initiatives have had much impact.
Right.
There has been no statistically significant change in per capita greenhouse gas emissions between 1972 and 2020 and the end of 2021.
Well, what went wrong then? Why is not working?
We're still at the early stage, and I think what we are thinking of and talking about as market measures aren't yet. And I don't want to be pessimistic. I actually think when we get serious, and we're close. When we get serious, we'll step back and we will see things a little bit differently, and we can move forward. When we and my partners, and I have to be very clear here, I'm a Nori co-founder and advisor, so I'm speaking more from my perspective and not for my partners. When we looked at carbon markets, we saw, or what we call carbon markets, we saw a few things. First of all, there's no true price discovery in those markets. And in most things we call markets, individual farmers or ranchers or small business operators cannot take their audited or verified ecosystem service claims directly into those markets. And small purchasers like individual families or small restaurants that want to offset their footprint also cannot buy directly. In both sides of the market, you have to go through a broker or aggregator, and the broker an aggregator on both sides combined to take 60 to 70% of the price any buyer pays for a credit. And there isn't enough money dribbling out to the people who are delivering the ecosystem service to really mobilize activity. And I want to tell you, how slow it's been. We think of we read about billions and billions of credits being created and traded in the voluntary and compliance markets worldwide. In the voluntary market, 100% of the credits that have been issued by existing market administrators over the last 20 years equates to less than 15% of 1 year's worth of greenhouse gas discharges by the 250 largest emitting corporations in the world. So we're still very, very, very young at this market stuff. Now, the good news is, I think with emerging sort of pledges to net zero and ESG and science-based target initiatives, I think we're on the precipice where we are. I think we're entering the next era where we get serious. And I think we've been serious in the past, but not enough real brain power has been mobilized.
Yeah, if we're talking about a marketplace, right? There's a supply and demand, and do you think, is there enough incentives in the market for the to drive the demand, for example?
You know what? I don't think there has been for a long time. I think we're on the precipice. I think we're seeing corporations making commitments, and I love what I'm seeing. I won't name names, but I'll tell you what's different now.
Yeah.
Throughout the 2000s and the teens, it was really common for big corporations to make pledges, and we're putting an internal price on carbon and all of that sort of stuff. And what's happened? Global greenhouse gases have just gone up. And if you actually look at the pattern of emissions, it's probably not entirely the case, but a large part of the reductions that North American and European economies have realized, they've simply realized by offshoring manufacturing. If more of the things we consume are not manufactured within our boundaries, our national greenhouse gas emissions go down, but the global footprint of our normal consumption goes up. If we're making and consuming the same things or more, and they're just being manufactured halfway around the world and being shipped to us, that we've just offshored emissions over the last 20 years. We haven't reduced them.
Right. It doesn't really change it doesn't really change the situation at all. Right?
No,
so
no.
Yeah.
But I think we're at a point now where for the first time, particularly corporate leadership are starting to see that. So now we're talking about tracing supply chain and scope 1 and scope 2 and scope 3 emissions. Back in 2005 or 6, the terms scope 1, scope 2, scope 3 didn't exist. So we're finally starting to adopt a mindset, which is the mindset we have to move into true progress in both in respect of demand for reductions inside and outside companies' own operations, and in respect of our discussion about what an efficient, functional carbon market might look like. So I'm really optimistic. It's been a while, but I think it's real this time. And going back, why do I think it's real? In the past, companies would make announcements and then report something, that's consistent with the announcement. What I see is major corporations in the last year or two have been making announcements, and they are honest and giving themselves 2 or 3 or 4 years to figure out how to do it. It's the first time I've seen announcements that we're going to take 2 or 3 years. It's going to take 2 or 3 years to figure out how to do it. So this is a good sign.
Yeah. Okay. So, please continue.
I didn't get back to Nori.
Yes, exactly. I would like to ask you about how Nori is going to make a difference in this space.
when my partners and I and Nori were looking at it, we realized, or we've taken the view that uh, any path to limiting climate change risk significantly has to include both reducing our releases of virgin fossil carbon emissions to the atmosphere, and also pulling heat trapping gases out of the atmosphere and storing the recovered carbon in natural and man-made systems. And our view is that when you think of those two services, we think removing and retaining is a higher value service. So the first thing we did in Nori is define Nori as a dedicated carbon removal marketplace. So we think credits in a market for avoiding emissions, avoiding deforestation, reducing emissions temporarily at a power plant, those sorts of things are valuable services that should be monetizable. But we don't think, we think the value of carbon removal and retention is greater. So we wanted to make a first marketplace that really forms that that commodity, that removal and retention commodity, so that as we move towards more mature market design, people will stop seeing all those credits as equal, but see them as different and know how to define exchange rates, reflecting their different valuation of the services.
And how does blockchain play a role in this process?
Blockchain is really important from a bunch of perspectives, not least of which is if you look at all of the opportunities worldwide to draw heat trapping gases out of the atmosphere and retain and build up terrestrial carbon stocks, photosynthesis is the most productive process, your first choice for investment for a number of reasons. The potential for topsoils around the world to retain more carbon than they're holding now it's hard to be accurate, but it's between 10 and 25 billion tons carbon dioxide equivalent per year for 100 years or so before we saturate. That's certainly not 100% of anthropogenic greenhouse gas emissions, but it's a big chunk. And when you, I am getting to blockchain, when you retain more carbon in the soil, you're making the soil more resilient and productive. So you're doing two things at the same time. You're mitigating climate change risk and you're building a more resilient, healthier topsoil layer, which you need in the event of climate change. So it's a twofer. So with that in mind, the first thing we did is look and see that for completely unrelated reasons, the global food economy had already embraced the idea of introducing blockchain to establish traceability from field to fork in response to other social needs. So even if you weren't kind of interested in the cryptocurrency part, which we are, it seemed perfectly rational that if the first carbon removal focus one should have is the food and fiber supply chains, and they're building blockchain anyway, it was about building a carbon market platform that could be eventually plugged in to the blockchain platforms that the global food and fiber community were going to be building anyway.
Yeah, I think the blockchain technology is definitely very useful in many use cases, like the one that you mentioned. And then also there's another aspect, which is the crypto, right? So for Nori, you have your own token, which is a cryptocurrency, Nori, and then you have NRT, which is a carbon credit, is a digital asset. So why do you need two, and how do these two digital assets work together?
The Nori NRT represents 1 ton of carbon pulled out of the atmosphere, currently through photosynthesis, where there's a commitment from Nori that carbon will be retained in terrestrial storage for at least 10 years. I say currently photosynthesis because the plan of Nori is to be able to issue NRTs to all forms of carbon removal and retention. So we started with food because that's the right place to start, but we're not stopping there. Yeah. In the Nori marketplace, farmers and ranchers set their asking price for their NRT, that's the carbon credit, and they are paid in a combination of one Nori token plus US dollars as required to settle at the farmer's asking price. The crypto is, I love the crypto part, and I'm a carbon market person, not a cryptocurrency expert. If you want to have the true crypto deep dive, you need to talk to one or two of my co-founders. Yeah. But there's a couple things that we discovered with the crypto that I love, which is if you're raising investment capital in the form of simple agreements for future tokens, or token sales, cryptocurrency sales, or offering equity investment where equity is converted into tokens at predetermined, there's all sorts of ways you can do that. A wonderful thing happens. Those who are investing in Nori through the crypto have as much interest as the farmers in the price of the carbon credit going up. So if we were doing traditional financing, selling equity, a return the investors get on their equity almost always has to come out of the margin that the suppliers of the service will receive. So so for investors win or the suppliers win. When you shift to crypto being your investment vehicle, you can have your investors' priorities and goals and your customers' priorities and goals in total alignment. It's so much fun. It's so much fun when all of a sudden your investors are calling you every third day saying, I just had an idea. They become your biggest, backstop in terms of developing market opportunities. It's exciting. It's very exciting. There's lots more to the crypto story, but the thing I love most is having the investors and the farmers having instead of it being one or the other, getting the return, they're on the same path. It really changes how building a business feels.
Yeah, I think that's interesting that you brought up this, because by turning those investors into part of the community, so they basically share the same vision as the farmers and everything, because they all hold the tokens, they all have the skin in the games and everything. So the incentives are amazing. So I would like to talk a little bit more about this. I know that you're not from the crypto background, but you've been through the process, and I think for a lot of viewers and listeners out there who are in the same place or similar place like you before, they would like to really know, how does it work? So what has the Nori team learned so far in this process of designing and developing this carbon credit plus, tokens and work in the crypto marketplace, etc.? Do you have some advice or some tips to share with us? I'm sure there's a lot. Yeah, so just take your time.
It's hard, but it's also early days. I think Nori's on the right path. We'll see if we are sooner rather than later. The first thing is, when we first were thinking about building Nori, I had said earlier, the existing registries and markets do not facilitate true price discovery. There's big barriers to both buying and selling, which mean a very small fraction of the price a buyer pays actually gets to the supplier of the service, whether that's a farmer or a direct air capture initiative. And so our initial goal was just to actually build a market. And we thought what we would do is look at the protocols and the credit creation methods of others and pick them and say, okay, we'll allow those credits to be listed on our market and those credits to be listed on our market. All of those registries are not really like markets. They're sort of like Craigslist, where a project gets registered, and when an auditor says it's complying with the registration rules, the registry issues credits. But then if somebody wants to buy and sell, it's all over the counter. It's individual transactions, and there's very limited visibility of the actual prices being paid. And it's also very common for carbon credits and allowances to be traded 10 or 11 or 12 times before they're actually used. You can't see the difference between reported turnover and actual volume of credits in the marketplace. So all we were initially focused on is, how do we create a real market using those credits? unfortunately, when we started looking at all of the methodologies, and long story for another day, we found we actually couldn't agree to listing any of those credits. So we had to develop our own methodology for credit issuance, which we hadn't planned originally, but we ultimately did. And Nori's still in pilot phase. The volumes that have been sold over our marketplace are small, but 80% of all of the credits we've issued have been sold, and the just over a dozen farmers and ranchers who've enrolled have received in their pocket, put in well over $2.5 million in their pocket to date, and are getting properly compensated. We're getting true price discovery. We're getting bid ask. It's working. So that transparency, real market goal, and that goal of getting most of the price the buyer pays into the farmer's pocket, those were our top two goals that we're achieving, and we're pretty proud of that.
That's great. Even if it's still in the early stage, but I think you are in the right direction. And
yeah,
it is marching forward. Now you mentioned the net zero emissions goal. Like we know that by 2015. So do you think that this is achievable? And what should companies that have committed to this mission should be doing right now?
I think it is achievable. I don't think it's achievable unless policymakers really flip our idea of what compliance cap and trade markets look like. This might be getting too much in the weeds. Right now, everybody's talking about reducing and trading real interest in greenhouse gas discharge rights, or quota. That's a quota-based supply management regime, which we know is inefficient in every other application. And we're about to discover that imagine last Friday, every country in the world agreed to an absolute greenhouse gas cap, with that declines over time, and we can have different starting dates for developed or wealthy nations and later starting dates for other nations. But all we're looking at as the currency or commodity is 1 ton, the right to discharge 1 ton of greenhouse gas to the atmosphere. Well, in every nation in the world, that nation's greenhouse gas budget or limit governs everyone's combined rights to produce and consume fossil fuels, fertilizers, and uranium, plus produce building products, cement, iron, steel, aluminum, glass, plastics, even lumber, plus produce food. So if we get to that place we've been trying to get to, where everybody agrees to national caps, what government operating rationally will ever agree to the export of a perpetually bankable right to discharge greenhouse gases? You won't. Those who start with the most and hoard them will be richest for the longest. So we've spent 30 years trying to build a market where it's irrational for anybody to sell. Now, there is another model that we executed that's known as the Montreal Protocol, to reduce the discharge of substances that were eating the hole in the ozone layer. And you probably don't want to get into details now, but
just sum it up for us. Yeah.
But that model worked. So when we get serious, when people think about it, they're going to say, wait a second, we shouldn't be selling, and we can't be selling, and nobody is rationally going to sell. They might lease, but they won't sell the right to discharge 1 ton of CO2. In the Montreal Protocol model, you ask everybody who's got a net zero commitment to report the global virgin fossil carbon content, the carbon, not the CO2, in their supply chain, and reduce it over time. And it sounds like a tiny, tiny difference, but a market where the commodity is the right to discharge greenhouse gases will never work. And the market where what gets traded is over compliance credits, where the metric is reduction of virgin fossil content in your supply chain, will be as efficient as you've ever seen.
So I think it brings us back to the last question due to the time limitation. I would love to talk to you for more. Like, I think we'll invite you back for our next discussion. So did you think that, you know, like what has to be changed in terms of paradigms and everything, or, you know, the mechanism, like you mentioned, you know, like the systems and whatsoever, what has to be changed or what has to be introduced, for example, like the blockchain technology or crypto or whatsoever? Could you sum it up for us through with your journey of Nori?
Yeah, blockchain and crypto is going to be there. I just think maybe in Nori, we were sort of earlier to recognize that than some others. I think almost everybody else gets that now, and there's lots of good reasons for that, and that's an interview in itself. In terms of having a robust market, blockchain and crypto don't change the following. A lot of brilliant, well-intended, hardworking people have been trying to make a market work where the commodity that's being traded is the right to discharge 1 ton of CO2 to the atmosphere. What we have to be tracking and reducing is 1 ton of fossil carbon content in the energy and building product and food supply chains. And so it's really there's a funny irony. You know, 5-10 years ago, if you went into an international meeting and you said carbon when you meant CO2, people would make fun of you because you said carbon when you meant CO2. These days, people always say carbon when they're actually meaning CO2. You know what? When we continue to say carbon, but we actually mean carbon, not CO2, when we say carbon, then we're going to be okay.
Wow. I think it brings up to another level that when people, you know, like the knowledge and everything about this subject really reach to the level that that would make it work for everyone. Thank you so much.
Okay.
Yeah.
Sorry.
No. Go ahead. You'll get finished.
I just wanted to try an illustration. This is a simpler context, but it's a very relevant case study. When we knew it was essential to eliminate tailpipe lead emissions, we didn't cap and trade tailpipe lead emissions. We ordered the suppliers of lead to reduce the lead content in the petroleum products they released into the marketplace over time. We let them trade over compliance units, given an agreed reduction schedule. And we, in North America, got the lead out of gasoline in 12 years, while the real price of gasoline fell by 12%. And when we started to get the lead out, all of the petroleum companies were of the view that there was one fuel formulation that was lead-free, and within 3 years there were 4 competing fuel formulations that nobody had thought about at the time. I know that if we start focusing on getting the virgin fossil carbon out of the supply chain, the rate of innovation and new ideas and that we will see emerge will just blow your mind. And we can beat net zero by 2050 if we just shift to that way of looking at it.
Brilliant. Thank you so much, Aldyen, for sharing with us your insights and the case studies. Thank you so much.
Thank you.
Thank you for joining us, and please make sure to subscribe to our YouTube channel and join our community by clicking the link below. And you can find me at Twitter at ViviLynSV, and let's build our Web3 future together.